My name is George Leong, and I'm writing to you today about a threat to the United States that is bigger than any threat I've ever witnessed. This threat is so big, it could quickly bring the United States to its knees and transform this once mighty nation into a third world country. Just how big is this threat? It's bigger than the stock market crash of 1929 and the Great Depression that followed. It's bigger than the oil crisis of the 1970s, during which the price of oil spiked dramatically. And it's bigger than the financial and banking crisis of 2008. If you've heeded our past warnings, then you already know we have a track record of accurately predicting major events like this before they happen. We predicted the sharp rise in the price of gold. On gold, here's the exact text we blasted to thousands of our customers way back on December 13th, 2002. I've been pushing gold bullion and gold shares for over a year now. Back in January 2002, I personally started buying gold shares. We forecasted the housing bubble and its imminent collapse. In respect to housing, we warned our customers repeatedly that the bubble would burst at a time when housing was booming and very few ever thought it could go the other way. We sent this e-alert to our customers on June 6, 2005. Those investors who believe a dark day will never come for the property market are just fooling themselves. And to the same people, on August 2nd, 2006, we warned, I'm getting very worried about the state of the U.S. housing market and its ramifications on the economy. The U.S. could be headed for its first outright annual decline in home prices on record, adjusted for inflation. And I really believe this could be a catastrophe for the U.S. economy. We were also among the first to predict the U.S. would enter a recession in 2007. On November 13th, 2006, we sent this blast out to our thousands of followers. The ramifications of the faltering housing sector are being underestimated by economists. A recession doesn't take much to happen. It's disappointing more hasn't been written on the popular financial sites and in the newspapers about the real threat of a recession happening in 2007. I want my readers to be fully aware of my economic opinion. I wouldn't be surprised to see the U.S. economy in a recession sometime in 2007. In fact, I expect it. Our customers knew well in advance that 2008 would be a terrible year. The Dow Jones Industrial Average finished yesterday with the best two-day showing since 2002. I'm looking at the market rally of the past 2 days as a classic stock market bear trap. As the economy gets closer to contraction, 2008 will likely be a most challenging economic year for Americans. Now remember, we sent this alert to thousands of customers on November 29th, 2007. We even predicted the Federal Reserve would bring interest rates to record lows and start printing money far before the Fed took any action. The single biggest threat to the U.S. economy and to the Fed in 2008 is deflation. We said you can bet the Fed will expand the money supply and drop interest rates aggressively as deflation starts to rear its ugly head. We sent out this alert on December 17, 2007, and we warned our customers about these events months, sometimes years, in advance. While the great majority of Americans were blindsided by these financial events, our clients were well warned. But I'm not writing to tell you about our accomplishments. The reason I'm writing you today is to issue an urgent warning. The truth is there's not much time left, and if I'm correct, we will soon witness the biggest financial event to hit the United States in the last 100 years. You probably won't see or hear anything about this financial threat in the mainstream media or in the evening news. You won't read about it in the newspaper or in any magazine that purports to give financial advice. In fact, you are unlikely to hear about this threat anywhere else except for this presentation. And that's why it's so important that you watch every minute of it. You need to know about this threat and how to protect yourself right now. In this presentation, I will explain the nature of this threat and why I believe it will economically devastate the U.S. But first, I need to put today's bleak picture in context for you. It all starts over a century ago at a small island off the coast of Georgia. It's the secret meeting that changed the world. In the year 1910, a small group of the world's most powerful men traveled to New Jersey and boarded a train. Secrecy was of utmost importance. Nobody knew about their plans. Even their families were given false stories so they would not know where these men were going. After boarding the train, the men traveled hundreds of miles south to Georgia and eventually made their way to Jekyll Island for a secret meeting. The only people present on the island were these few men plus a handful of servants. Each man was sworn to secrecy. The men did not want even the servants to know their identities, so while they were on the island, they were permitted to call each other by their first names only. The use of last names was strictly prohibited. Why so much secrecy? It's because these men had arrived at Jekyll Island to discuss the creation of a central bank that would have the authority to create money and loan it out at interest to the American people. Previous attempts to create a central bank had been unsuccessful, but this time, fate was on their side. The secret of Jekyll Island meeting ultimately led to the creation of the Federal Reserve. The Federal Reserve Act was passed 3 years later on December 23, 1913, when President Woodrow Wilson signed it into law. The Federal Reserve Act not only established the Federal Reserve, an organization owned by a group of private banks, it also gave them the authority to create money and loan it to the United States government. Before the creation of the Fed, the U.S. government created its own money and did not have to pay interest on the money it created. After the Fed was created, the U.S. no longer created its own money. Rather, they relied on the Fed to do it for them. Not only that, the U.S. was bound to pay interest on all the money the Fed created, and thus began the biggest Ponzi scheme recorded in history. You see, when the Fed loans money to the U.S. government, it expects to be repaid with interest. To illustrate how this works, let us assume that there's no money in circulation and that this is the very first day the Fed will create money for the U.S. Let us say that the government needs $1 million. They ask the Fed for $1 million, and the Fed prints it into existence. The Fed then explains that the $1 million must be repaid with interest. Except there's a problem. If the Fed creates $1 million and loans it to the U.S. government, how exactly can the money be repaid with interest? After all, there's only $1 million total in circulation. The best the government can do is return the money dollar for dollar. But the Fed demands interest. And so they create more dollars and loan those to the U.S. government as well to enable the repayment of the initial loan with interest. Basically, the U.S. government is paying back old debt with new debt. At first, this process works slowly. The total amount of money in circulation grows, and the debt grows at the same time. The debt always exceeds the amount of money in circulation because that's how the system works. Obviously, it doesn't take long before this process picks up momentum. More money is created faster and faster. The U.S. debt grows bigger and bigger, and at a certain point, the whole scheme can no longer be maintained. We are now at that point. Since 1913, America has been built on a Ponzi scheme. In case you don't know, the term Ponzi scheme is named after Charles Ponzi, one of the greatest con artists and swindlers in American history. Nearly every Ponzi scheme promises unusually large returns in a short amount of time. These profits are often, quote-unquote, guaranteed. But no profits are ever generated in a Ponzi scheme. Early investors are simply paid with the money from later investors. When there are no new investors, the scheme collapses, and all the late investors lose everything. The relationship between the Fed and the U.S. government mirrors that of a Ponzi scheme. Early debt is paid back with new debt until the debt grows to an unmanageable size and the whole thing collapses. But understanding the Federal Reserve Ponzi scheme is just the tip of the iceberg. In 1944, the U.S. dollar became the world's reserve currency with the creation of the Bretton Woods system. The dollar would be backed by gold, and all other countries would maintain a specific exchange rate by tying their currencies to the dollar. The Bretton Woods system lasted until Richard Nixon abruptly closed the gold window in August of 1971. No advance warning was given to other countries, which is why this became known as the Nixon shock. Nixon's actions effectively ended the Bretton Woods system, which meant the dollar was now a pure fiat currency with nothing of value to back it. It also meant that other countries could no longer exchange their dollars for gold. This could have destroyed the dollar if not for the efforts of Henry Kissinger, who negotiated a deal with the House of Saud to sell oil in only U.S. dollars. Other oil-producing countries soon followed Saudi Arabia's lead, and thus began the era of the petrodollar. The new petrodollar was not backed by gold, but it was backed by oil, a valuable resource that every country on planet Earth needs. Naturally, demand for dollars was restored as other countries began to hoard dollars in order to buy oil. The new oil-backed dollar has lasted for a long time, from 1973 all the way up to this year. But something happened in September of 2012 that practically guarantees the dollar is finished. Most Americans don't have a clue about what I'm about to tell you, but it's 100% true, and it could have a huge impact on you in the very near future. You see, back in the early 2000s, Saddam Hussein began to talk about bypassing the US dollar and trading oil in euros. The US knew this could be catastrophic for the dollar, as it would signal the end of the petrodollar. Thus, the 2003 invasion of Iraq terminated any plans Hussein would have and delayed the dollar's fate for another 9 years. Now enter China. China holds more U.S. government debt than any other country in the world. They currently hold more than $1 trillion US dollars. Beginning in 2007, China began to get worried. What if the U.S. collapsed? What if dollars suddenly became worthless? Could they really afford to hold on to $1 trillion forever? If China was worried in 2007, they were downright panicking in late 2008, as it seemed a total financial collapse was imminent in America. China held massive amounts of US dollars, but they couldn't sell them without causing a huge drop in the dollar's value. What's more, China still needed dollars to buy oil. Yet China understood it was extremely risky to continue buying and holding dollars, so they began to diversify by buying up massive amounts of gold and other precious metals. China bought 490 tons of gold in 2011, twice the amount they bought in 2010, and their gold buying binge doesn't seem to be letting up anytime soon. In the first 6 months of 2012, they've already bought 383 tons of gold. At that pace, they'd acquire 766 tons of gold by the end of this year. More importantly, China is following in Iraq's footsteps. Just as Iraq had planned to trade oil in euros, China began to explore the idea of bypassing the dollar by trading oil directly with oil-producing countries. You see, while the U.S. was willing to attack a small country like Iraq, I don't see any way that the U.S. would attack a country as large and powerful as China, especially when you consider that China produces most of the consumer products purchased in the U.S. By trading directly with oil-producing countries, China would then be able to offload dollars before they became worthless and still have access to as much oil as they want. But let me be clear, China's plans are no longer just plans. They are now reality. You see, as of September 2012, China and Russia reached an agreement and formally announced that they would begin trading oil directly. Russia will provide oil to China, and China will pay for the oil not with US dollars, but with yuan. While this announcement has not been widely publicized, it spells the end of the petrodollar. In other words, the US dollar is the world's reserve currency in name only. Now that China and Russia have abandoned the petrodollar, other countries like Iran, India, Argentina, and Brazil are expected to soon follow China's lead, and there's nothing the United States can do to stop it. But it gets worse. As oil-producing nations dump the US dollar in favor of other currencies, demand for dollars will likely plummet. No longer will nations need billions of dollars on hand to buy oil. And yet, at a time when demand for dollars is already drying up, the Federal Reserve is printing more money than ever before. You see, back in early 2009, in the depths of the financial crisis, they told us that the first round of quantitative easing, or QE, would solve all the problems. But it didn't. Then came QE2 in late 2010. We were told billions more were needed to stimulate the economy. Obviously, QE2 was not effective either. QE3 finally arrived in September 2012, but this final round of quantitative easing is very different from its predecessors. That's because QE3 authorizes the Fed to buy $40 billion of mortgage-backed securities every month until the economy gets better. This means that QE3 will never end. As QE3 pumps billions of dollars into the U.S. economy each month, we will see inflation begin to take hold. I already see the price of gas and food increasing, This will get worse with each month that passes. So let's put this all together. China could be getting ready to dump their US dollars. Their new trade agreement with Russia practically guarantees that other oil-producing countries will soon be dumping dollars too. At the same time, the Fed is creating new money at an astonishing rate. This money is already causing inflation. Demand for US dollars is going down. The supply of US dollars is going up. This can only lead to one possible outcome: hyperinflation. You mention the word hyperinflation, most Americans scoff. Hyperinflation is something that only happens in places like Weimar, Germany, or Zimbabwe, but not the United States. Well, I hate to burst your bubble, but hyperinflation is nearly inevitable at this point. We've crossed the Rubicon, and there's no going back. Just look at the price of corn and wheat. They've skyrocketed a whopping 18.5 and 39.5% respectively since the beginning of 2012 alone. And hyperinflation couldn't come at a worse time. Real incomes in the U.S. are declining. The average American family makes less money today than they did a year ago. And what's more, the official U.S.A unemployment rate, which includes people who have given up looking for work and people who want full-time jobs but who are stuck with only part-time jobs, has held steadily for months at about 15%. The unofficial shadow statistic unemployment rate, which includes the long-term unemployed, sits at 22%. A dollar that has been dethroned, falling incomes, persistent unemployment rates, and rising prices of necessities like gas and food, these are all the ingredients necessary for economic Armageddon. And make no mistake, the Ponzi scheme called America is about to reach critical mass. The fuse has been lit, and there isn't much time left. When the Ponzi scheme finally explodes, the economic carnage that follows could happen almost instantly. I believe it will happen far faster than the fall of Rome, and it will be much, much bigger than the banking collapse of Iceland in 2008. And while America's collapse may not happen in one literal hour, it will happen so fast that most people will have no time to react. Already, we're seeing major cracks in America's economic foundation. In a single day, on October 31st, 2011, the commodities brokerage firm MF Global collapsed, wiping out $1.6 billion in customer money. MF Global's case is unprecedented. The company literally stole money straight from customers' accounts. In many ways, MF Global represents the rotten underpinnings of the American financial system. When the Ponzi scheme finally gives way, it will collapse as quickly as MF Global did. One day it existed, and the next day was gone. It is truly remarkable that the Federal Reserve has been able to continue running its Ponzi scheme for as long as it has. While most people have been oblivious, many people throughout history have seen the Fed for what it is, including the president that authorized its creation. After Woodrow Wilson signed the Federal Reserve Act into law in 1913, he later lamented, "I have unwittingly ruined my country." And he was right. And now the chickens are coming home to roost. How prepared are you for the economic destruction that will rip through every town, city, and state in the U.S.? And how prepared would you be if one morning you wake up to discover that the dollars in your wallet are close to worthless? Most Americans are painfully unprepared. Fortunately, you have a unique opportunity to avert the worst of the financial carnage. In fact, I've identified some little-known ways that you can use to protect and even grow your wealth during what promises to be the most devastating event in American economic history. And I've compiled all my research into a brand new report called the Dollar Doomsday Guide: How to Make a Killing as the American Ponzi Scheme Collapses. This fresh-off-the-press guide will give you a clear roadmap for protecting your wealth and positioning yourself to capitalize on what I believe will be the most dramatic economic collapse the world has ever seen. When you receive it, you'll discover safe havens for your money. These unconventional investments will not only protect your wealth, but they go up in value as the US dollar declines in value. I give you specifics on where to park your money so you're protected as the US dollar collapses. Getting your money into these safe havens is easy. You'll also discover foreign stocks that are poised to pop. With the greenback on the ropes, I've identified 4 strong foreign stocks set to surge in value as the U.S. declines. All the major brokerage houses and online discount brokers can buy these four stocks for you. These are conservative companies that pay an above average dividend and are all major billion-dollar corporations that profit as the U.S. dollar falls in value. You also discover precious metal myths. Gold will not be the biggest winner when the U.S. dollar collapses. I believe silver prices will do better than gold in the remainder of this decade, and my top 3 silver stock picks could make you a small fortune over the next few years. These silver stocks are not American. They are some of the biggest companies in the world that trade on exchanges outside of America. Again, all the major American brokerage houses and online discount brokers can buy these stocks for you. Watch them skyrocket in value as the greenback deteriorates right before your eyes. You also discover contrarian currencies. As the dollar drops in value, it will drag other currencies with it. But some currencies will become stronger, and a few will contend to become the world's next reserve currency. Here are the currencies we believe you should be holding. And most important, you don't have to buy the currencies. I'll direct you to exchange-traded funds you can buy, just like stocks, that go up in value as these currencies appreciate at the expense of the U.S. dollar. The Dollar Doomsday Guide is valued at $39. So why am I giving away this new report for free? It's simple. America's headed for an iceberg, and I want to provide the people who are awake with an opportunity to protect themselves as America starts to sink. I will send you a free copy of the Dollar Doomsday Guide when you try my Judgment Day Profit Letter, our investment letter that focuses on the unique, once-in-a-lifetime opportunities being presented by America's coming currency collapse. I personally write each issue of Judgment Day Profit Letter. I've been a stock analyst and economist for more than 2 decades and a senior editor here at Lombardi Publishing Corporation. More importantly, my track record is so good that Lombardi ranked me as their top stock picker for 2012. Just how good am I at zeroing in on winning investments? In my Judgment Day Profit Letter portfolio of recommended investments, I have an unprecedented 50 winners out of 55 stock picks over the past 3 years. That's a 91% win rate. It means that more than 9 out of every 10 investments I pick go up in value. Here are a few examples of my picks in Judgment Day Profit Letter. A highly integrated producer and distributor of fruit juices like kiwi, apple, and pear, which have become a small luxury for rich Asian consumers. Now, this fast-growing company has the largest fruit plantation in China, and most importantly, enjoys direct government subsidies. Shares popped 35.2% in 1 month after I recommended them. Or how about a leading service provider that focuses on personalized tutoring services with 295 learning centers in 63 economically developed cities across 28 of China's 34 provinces? I quickly found out the Chinese government wants its people to be educated. Shares jumped 69% in just 2 months after I recommended them. Or the entertainment media company, with 65,000 retail outlets scattered across 31 Asian cities. Since I recommended it, shares climbed 40% in 1 month. And these are just 3 out of the 50 winners I picked over the last 3 years. Other big wins include 139% gains on a manufacturer of orthopedic implants, 75% gains on a petroleum holding company, and 202% gains on a commercial auto leasing company. Now, given the unprecedented economic changes looming on the horizon and my track record, I believe the best is yet to come for Judgment Day Profit Letter subscribers. When you try Judgment Day Profit Letter, you'll get the Dollar Doomsday Guide for free. But that's not all. We'll also send you a second free report called Asian Inflation, How to Profit from China's Exploding Food Prices. Right this very moment, China is experiencing a Western-style economic slowdown, and they're taking a page right out of the Fed's playbook to try to stimulate their flagging economy. That's right. China's central bank is lowering interest rates and printing money, and this is having an inflationary effect on their economy, especially on the price of food. As the Bank of China drastically lowers its official interest rate and starts printing more money to save its economy, food prices could soar even higher. So how will you profit from this trend? I've identified a Chinese agricultural stock that trades on a recognized North American stock exchange and that I believe will benefit immensely as China's food prices rise. Over the past 12 months, this company has reported revenue of $402 million and net profit of $30 million. Long-term debt is almost non-existent. Working capital is $200 million. And the best part, you can buy the stock for under $2.50 today. It trades at an unbelievable low price earnings multiple of 7.8 while paying a hefty dividend. I expect a $10 price on this stock within 12 months. I just completed a brand new investor research report called Asian Inflation, How to Profit from China's Exploding Food Prices. This report details why we believe this stock will move from $2.50 to $10 in 12 months, where to buy it, our financial analysis of the company, and my technical analysis of the stock, complete with stock charts and our projections. This report has a retail value of $39, but as a new subscriber to the Judgment Day Profit Letter, you'll get the report for free. But we're not done yet. You'll also get a third free report. As the Ponzi scheme called America crumbles and the dollar tumbles in value, the price of precious metals will explode. Hard money may even become common currency. We personally believe silver will continue to outpace gold in the coming months and years. Silver is already up 690% since 2000 compared to gold's 421% price increase. Yet silver's biggest gains may be yet to come. Since 1950, the amount of silver in inventory has plummeted. At the same time, demand has reached all-time highs. The U.S. Mint recently revealed that silver sales in 2012 outpaced gold by a ratio of 53 to 1. For every ounce of gold sold, they sell 53 ounces of silver. This feverish pace of silver sales is not sustainable, since the current mine ratio for silver to gold is only 9 to 1. In other words, silver is being gobbled up faster than it can be produced. This looming silver shortfall, regardless of the specter of hyperinflation, will push the price of silver much, much higher than it is today. And with that in mind, we've put together an exciting report called the $1 Silver Stock Every Investor Should Own. This freshly minted report reveals the one silver stock that every investor should own, a stock that trades just under $1 a share right now. The company has proven silver resources of 39.4 million ounces at an estimated cost of just $6.14 an ounce. Double the cost to get silver out of the ground, and we're looking at produced silver at less than $13 an ounce. With the price of silver hovering around $32 an ounce and climbing, this represents an incredible value. The company has strong cash flow, zero debt, and is continuing to expand their production capacity. And the positive outlook for this company doesn't even account for the current production of zinc, copper, and lead, all of which contribute to their strong profitability. With the next phase of the bull run in silver about to get underway, we expect this little silver miner to perform extremely well. And so early investors should make a lot of money on this play. We'll give you a full analysis of this stock, why it represents such an excellent value, and how to buy it in the $1 silver stock every investor should own. This report is also valued at $39, but it's yours free when you subscribe to the Judgment Day Profit Letter. I want to send you all three of these reports worth $117 free just for trying my Judgment Day Profit Letter. Here are the three reports you'll receive. The Dollar Doomsday Guide, How to Make a Killing as the American Ponzi Scheme Collapses, Asian Inflation, How to Profit from China's Exploding Food Prices, and the $1 silver stock every investor should own. Then, every month going forward, via email, you'll get Judgment Day Profit Letter with my top-tier, hand-selected recommendations. You'll get 12 monthly issues of Judgment Day Profit Letter with details on each of my recommendations, including stock price changes, buy, sell, or hold advice, stop limit tips, and my advice on when to get out for maximum profits. You'll have full access to my open portfolio and past recommendations, some of which are still buys that you can add right away to your portfolio. You also get my call-in hotline. You'll have access to my telephone hotline that you can call for my latest advice. So how much does it cost, and how do you get started today? Well, I'll tell you. But first, let me ask you, how much would it be worth to you to preserve and grow your wealth, even as the American Ponzi scheme suddenly collapses? How much would it be worth to you to know that you're safe and secure no matter what happens to the U.S. dollar or the Federal Reserve? Peace of mind is worth quite a bit, and the profits you can make from Judgment Day Profit Letter could be enormous. Remember my 91% win rate. I want you to be there to profit from my advice. And I've made it easy for you to do just that because I've knocked $100 off the normal rate. Here's how to get started. Judgment Day Profit Letter normally costs $195 a year, but because of the urgency of the situation in the U.S., I'd like to make it as easy and affordable as possible for you to subscribe. If you sign up through this special invitation today, you'll pay just $95 for a full year. That's 12 monthly issues of Judgment Day Profit Letter. That's $100 off the normal rate. I'll send you these special investor research reports for free. The Dollar Doomsday Guide, how to make a killing as the American Ponzi scheme collapses, Asian inflation, how to profit from China's exploding food prices, and the $1 silver stock every investor should own. These reports could make you a fortune over the next few months, and they could protect you from the economic tsunami that's going to wipe out the wealth of millions of average Americans over the next couple of years. And remember, your satisfaction is guaranteed. I'm confident you'll love Judgment Day Profit Letter, and I'm confident you'll want to remain a subscriber for as long as you can. But if for any reason you decide it's not for you, just notify us anytime during your 12-month subscription, and we'll send you a refund for the remaining issues in your subscription. The 3 special investor research reports are yours to keep for free. And every once in a while, you'll be faced with the decision that has the power to change the direction of your future. I believe that this is one of those decisions. For just $95, you'll get 12 issues of Judgment Day Profit Letter, and each issue will have at least one investment recommendation that could quite literally change your life. Time for the Ponzi scheme called America is quickly running out. There is no time to waste. Sign up today and take advantage of this invitation. Just click the link below now to get started today.